It's an extraordinary time in history and we've decided to share with you our own investment philosophy during these troubling times. Although most of our investment portfolio is in real estate, over the past 2 weeks we have been keen to make a play on the stock market. So, what better way than to put our money where our mouth is and purchase 10 stocks and make a video about it. Right now, the market is incredibly volatile, making it a great opportunity for investments. Before we get started, help us out and hit the like button for the YouTube algorithm, and, if you like what you see, make sure to subscribe. We want to make something clear for us: this is disposable income, meaning that we are more than comfortable with losing our entire portfolio, and all of your stock investments should be treated as such. Do your research and assess your own level of risk. Right now, the stock market is looking pretty appealing and we wanted a piece of the action. You'll see, the big 4 categories of stocks we purchased are: 1. Tourism, 4 stocks. 2. Oil and petrol, 2 stocks. 3. Banks, 2 stocks. 4. Fashion and a little bit of entertainment, 2 stocks. Our core philosophy for this investment is that most of these companies are facing a temporary decline in revenue due to the pandemic. But 12 to 18 months from now, when everything goes back to normal, we should see the stock price jump right back up. With that said, here are 10 stocks we purchased during the pandemic. Number 1. 21st Century Fox. We purchased at $22 per share. The stock is at a 5-year low with big projects in the pipeline. It's a big media company and many of you are familiar with the brand. They recently were acquired by Disney. At the end of last year, the stock was trading at around $37 per share, and we don't see why, 12 months from now, the company won't be back on top. Number 2. American Airlines. We purchased at $9.30 a share. Our thought process is as follows. Airlines are temporarily disabled due to the pandemic. But once this is back, not only will they see a boom in tourism, but they'll return to providing the service they're known for. At the end of last year, the stock was trading around $28 a share. If these airline companies don't go bankrupt, there is a lot of upswings to be made in the next few years. Number 3. Citigroup. We purchased at $37.69 a share. Banking and mortgage stocks are the ones that we are most worried about because this could take a turn for the worse, and Citigroup has been hit dramatically when the stock price dropped from $500 per share to only $15. Right now, the stock is at a 5-year low, but we are keeping a close eye on it. Number 4. Delta Airlines. We purchased at $21.95 per share, but we are still holding off another very controversial airline on our list of stocks. Delta is losing approximately $60 million per day right now with air traffic coming to a standstill. But this is the reason we bought in. At the end of last year, the stock was trading at around $60 a share. Before we continue, we wanted to ask you to hit the like button for this video. That will help us tremendously to continue delivering quality information to you. As well as hit the subscribe button. Thanks for your support here on YouTube. Number 5. Marathon Oil Corporation. We purchased at $3.49 per share. As many of you might know, nobody is buying gas, thus, the drop in demand and price. Many oil companies are struggling right now, sitting on large inventory. At the end of last year, the stock was trading at $13.50 per share. Number 6. MGM. We purchased at $10.05 per share. MGM so far has been our second best performing stock with over 40% in returns in a week. At the end of last year, the stock was trading at over $30, so there's definitely some room for growth when this is all over. Number 7. Marriott. We purchased at $58.24 per share. It has a solid portfolio of properties all around the world. When the entire industry started going down due to the pandemic, we wanted in. Marriott closed out 2019 being traded at around $150 per share. Number 8. Invesco Mortgage Capital. We purchased at $1.90 a share. The company has a great track record for the past 10 years and we got lucky the price was hitting an almost perfect bottom when we bought. Just to put things into perspective, at the beginning of the year, the stock was being traded at $15 per share. Number 9. Murphy Oil Corporation. We purchased at $5.70 per share. We decided to take a chance on this one because of the all-time low price per share with the same reasoning as with Marathon. There's a fairly high likelihood the price will slowly climb back as the demand for crude oil returns to normal. At the end of last year, Murphy Oil Corporation was trading at $25 per share. Number 10. Under Armour. We purchased at $7.96 per share. The last stock we purchased is Under Armour. We believe in the brand and their ability to keep being creative and agile in its market. And it doesn't hurt that at the end of last year the stock was trading at $21 per share. We have spread the investment as 40% tourism and the rest of the industries getting 20% each of our budget. Although we've invested in index funds before, this is the first time we're doing straight-up stock picking, and we're excited to see what happens. As a thank you for watching with us until the end, you are getting a bonus. But first, hit the like button if you haven't done it yet, that will help us with the YouTube algorithm. Phase 2, Real Estate Collapse. All of this chaos in the markets has yet to have a direct impact on the price of real estate. As of right now we have stopped acquiring new properties and are waiting for the market to react. Most of the stock we purchased on this video have suffered at least a 50% drop in the last 30 days. In 12 months, we expect most of these stocks to recuperate most of their value. But then the real estate market will see its very own drop in prices, with some experts saying it could drop as much as 50%. If our financial experiment is correct, every $1 we put into stocks right now will be worth $4 in real estate in 12 to 18 months from now. This is something the rich have been doing every time a financial crisis comes around, and we're eager to see if we can pull it off as well. That's how you use a crisis to multiply money. If you plan to do the same, please write the word multiply in the comments so we know you've made it this far in the video and found it valuable. If you find this video useful, please press the like button and share it with your friends. Make sure to like and subscribe to our channel so you never miss another video, and we'll see you next time.